You're tuned in to Agriculture Today, and we start our Friday show with an international and domestic grain market look with K-State grain economist Dan O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. Dan, Guy, thank you both so much for taking the time to join us today.
Thank you, Shelby.
The WASD report came out last week, and as always, wanting to touch on that domestic and international side. And Dan, starting off with you on the domestic side of things with corn.
Well, the big news was the corn yield. The USDA did adjust lower the U.S. corn yield figure it had from 183.8 down to 183.1, down about 60 bushels, 60 million bushels. Total supplies ended up being down about 61. Really no other changes in the supply demand balance sheet other than that. That number did, though, as you took 61 million bushels off of ending stocks. Now we're down to 1.938 billion. Had been just under 2 before, and that compares, for context, in the last two marketing years, the 22-23, we were at 1.36 billion, stocks to use at 9.9%. Last year, that year ending August 31st of this year, we were at 1.76 billion bushels, 11.8 billion, 11.8% stocks to use. And now with these numbers, we're at, again, 1.38 billion bushels ending stocks, 12.9% stocks to use. So I think that when you just want to talk briefly on what the crop production report said, it did show that some in the central 3I states, we really led the way in terms of U.S. corn production. Yet yields of 213 bushels an acre estimated in around for November around November 1st. In Iowa, 218 in Illinois, 209 in Indiana. Actually, Idaho had 207. So now instead of the 3I states, I guess it's the 4I states, Guy. It's just not contiguous, I guess. But other pretty good yields elsewhere. 183 in Minnesota, 181 in Wisconsin, 182 in Missouri, 194 in Nebraska. A lot of that irrigated. Of course, we've got dry land and irrigated mixed together. Our average yield for Kansas, 138 bushels an acre. So there's some interesting stuff if you dig in, if you dig into the details of that report. When you look at the ears per acre times the yield, we had a lot higher than we've been seeing in terms of actual yields relative to number of ears. So we must have had tremendous years. And Guy, from your home area back in Illinois, that's probably what they were reporting to you.
Yep.
How about on the international side, Guy?
Well, look, shifting to the international side of things, just looking at that, Dan, this is what's making me a bit bullish corn overall. World ending stocks have declined about 3 million or 2.5 million tons to from 332.4 to uh, down to 329. Um, that's about 15 million metric tons less than last year. Corn, that was coarse grains. Corn's dropped
Yeah.
2.4 down to 304. That's 10 million metric tons lower than last year. Uh, Corn use, non-U.S. corn use has jumped 6 million metric tons up to 916 million metric tons. Now, the USDA did scale back Chinese imports, 3 million metric tons to only 16. It was 19 previously, and as high as 23 million in previous years. Even so, I'm optimistic we're going to see good export demand start to come into the market. We have already, particularly from Mexico. Mexican imports have increased 1.2 million metric tons to nearly 25, up 1.5 from last year. They're experiencing quite a bit of dry weather down there still from last year, and Mexico's moved into the number 1 slot as the largest corn importer, moving China down to number 2. Other crops around the world with our competitors, Brazil and Argentina, really no change there at all. Major exporter ending stocks. is down to 8 million metric tons versus just under 13 last year. So it's tightening things up, which means these importers are going to have to come to U.S., and I think we're going to see that go up. One other interesting point is South African corn. Exports down there are generally about 2.5 million metric tons. Major drought down there, actually suggesting that South African imports could be as much to 3.5 and 4 million metric tons, which that keeps me pretty optimistic. That whole Southern Africa is experiencing quite a bit of dry weather. And if you look at other places around the world, particularly Europe, Eastern Europe, Russia, Ukraine, as well as Northern China and Southeast Asia, there's some major dryness there when you look at that global soil moisture map. And if those conditions persist till spring, I think that's going to bring quite a bit of export demand to our markets.
If I could add to and support what you're saying, I know um, when you calculate the stocks to use for major exporters, now you and I talk about that quite a bit.
Hmm.
2 years ago is at about 7.8%. Last marketing year, about 5.35, about 5.4. This year's calculated at 3.3. It kind of brings up the issue of how and that, pardon me, and that estimate, that projection is for way out into the next market year with the Brazilian corn crop
Yeah.
coming back in at 133.5 million metric tons, down just a little bit, probably because of acreage from
Yeah,
this
that's
year's.
a very, very tight number, Dan. And I
Yeah,
think price is going to have to ration a bit of that demand going forward on that, or we're going to have to find some alternative grains, which I think we can talk about that when we get to the wheat situation.
and so it brings up the situations as we sit right now in cash markets for Kansas. What do we anticipate going forward? Well, all the news now will be on the demand side. So that's what we'll be watching. And it would not be out of the realm of possibility to see exports and usage hold up. We shall see. And that continue to whittle away at ending stocks for this projected ending stocks for 24-25. If I can add in on sorghum, uh, really not a lot of changes in the sorghum supply demand balance sheet other than the U.S. yield was raised about a little over 3 bushels per acre. No changes in the export number, still projected to be 220 million, down from about just under 240 this year. Where there was a change was that there's, with the low price, it looks like the USDA is anticipating more feeding of grain sorghum going on, about 15 million bushels. Well, at this time, until China or somebody else comes in and starts to really take out quite a bit of U.S. grain sorghum, well, it'll be priced good to pretty well to feed. I would say on sorghum though that prices, Shelby, that you and I were looking at last week, and we'd seen the cash prices in Hutchinson for sorghum equal to that of corn. So that to me is indicating that, gosh, somebody's probably looking to get grain in hand so they can send it out via export. So
Yeah.
with that, what do you think? Why don't we go to soybeans? Would that be
Just if
okay?
I can make a couple comments on the sorghum international sorghum situation. With China corn imports down, I would expect sorghum imports to be a little weaker there as well. Also, Argentina and Australia are having some fairly reasonable crops projected. They're being planted now and over the next couple months, and I think that'll compete against our exports a bit into China. So, and I think the need to feed a bit more sorghum domestically, we'll see that premium of sorghum over corn be a little less than maybe what it's been historically.
And moving
It
on to talking about soybeans, Dan, on the domestic side of things.
Not a lot of changes in the balance sheet. That the biggest issue that came into play was that the USDA did come in because of late season drought, other maladies in U.S. crop. We did drop yield per acre down to well, just about 1.4 bushels an acre, about a 1.5 bushels per acre, down to 51.7. That took 121 million bushels off of production. We did see a crush whittled down in response to that. Uh, and the pace of crush so far down 15 million bushels. Exports projected down to 25 million. Ending stocks were we're reduced from 550 million bushels down to 470 still. So look at the last three marketing years. So we had 264 million bushels in and 6%, 6.1% stocks to use 2 marketing years ago. Last year, we climbed to 342 million bushels ending stocks, about 8.3% stocks to use. This year, even with these reductions, we're up to 470 million bushels of ending stocks projected for the 24-25 marketing year, ending August 31st next year, and up to 10.8% stocks to use. Guy, you want to talk internationals?
Yeah, look, what you're seeing in the increased carryover and ending stocks in the U.S. directly impacted by international markets. World ending stocks, although they shaved 3 million tons off of it, it's nearly 20 million tons above last year. South American, Brazilian, Argentina, and Paraguay numbers were basically unchanged, 19 million tons above last year. So effectively, that's that increase in ending stocks, and the U.S. is going to be carrying most of that. China's import demand was left unchanged at 112 million metric tons. That's three above last year's 109 million. Um, so yeah, not a lot of new news there in the soybeans. I guess it was probably neutral for the most part for the marketplace.
It's really going to be interesting to see what happens this spring when farmers decide whether to plant corn or plant soybeans. Generally, soybeans with these prices, for the most part, does a little better job of covering costs. It's not gangbusters profitable, but it's a little better job of covering costs than corn does. But as we've talked about, generally we're a little more pessimistic probably on soybean prices worldwide going into next year than we are for corn. Although the USDA is still pretty pessimistic, but when you look at just real quickly, you look at where earlier this week where Dees 2025 corn closed at, it's $4.40 on, I think that was on Wednesday. We're looking at it, and then soybeans, November 25 soybeans at 10.28. So nobody's doing great, but just a little bit of advantage to soybeans on the future side.
We're cutting to a short break now on Agriculture Today, but when we come back, we'll once again be joined by Dan and Guy as we continue our grain market conversation.